Wait, what? I can do that? This is Eric Bell with Wait, what? Financial matters that matter for business and the people that own them. Hi, this is Eric Bell. I'm fortunate today to have Cameron Samini with me, the top real estate agent and commercial side for Los Angeles. He's with Linestall. Cameron, thanks for being here with me today. We're going to talk about commercial real estate and all the pitfalls and positives and negatives, things that are going on right now with the pandemic.
Thanks for having me, Eric. Good day to be here.
All right. So tell everybody a little bit about you, where you started, how long you've been in commercial real estate, a little bit about Linestall.
Sure, yeah. So I got into real estate through Brett Line of Linestall. Brett was my fraternity brother, and he was working for a guy named Martin Ensbury, who was brokering and syndicating real estate in Southern California, mainly in like Gardena, Hawthorne, Inglewood, and Inglewood was his market. And I was working for Disney at the time, selling TV shows and getting paid a good amount of money, and I was on the road every day, so I never had any expenses because Disney was paying for all my expenses at the time. So I started investing with Martin, and then ultimately I was looking at how Martin was making money. I was like, I can do that, and so I started syndicating real estate. And then from there, I really got into buying and brokering apartment buildings, and I just decided I wanted to go full-time brokerage. So I started brokering apartment buildings in the Southern California area, mainly LA County, and that's what got me started.
You know, we met a couple years ago. I came to your office and I couldn't believe the level of activity there. Seems like there's a lot of commercial property being sold right now, or at least through you, through Linestall anyway.
Yeah, I'd say it's probably, I mean, it's the most I've seen sold in a period. I mean, there's more transactions happening now than I've ever seen before. And it's the market is hot. I mean, there's so much money out there, between the stimulus money that came out, between interest rates being so low, everyone is trying to buy more and more apartment buildings, commercial properties, development deals. I mean, it's all going at an expedited rate. I think that's mainly because of how much money is out there in the market. People held on to a lot of cash during COVID when it first hit, and everyone's spending all the money they held on to, plus they're spending the stimulus money, plus low interest rates. It's just made a huge buying spree.
You know, I know residential real estate, they say the prices are at a high here in Southern California. What's going on with commercial?
Yeah, I mean, they're also at a high. I mean, when you have really low interest rates, it allows the cap rates to go lower as well, right? Because if I can get debt for 3.5% and I have a cap rate of a 4%, I'm still making money on the bank's money, right? So people are actually being able to sell properties at lower cap rates than ever before because interest rates are so low.
Cap rate, tell me what that is, just for the audience anyway.
Yeah, capitalization rate. Like if you buy, let's say you were to buy a property, that property is $1 million, and you buy it all cash. If you have a 5% cap rate, making a 5% return on your investment. So it doesn't take into account the leverage that you have. It doesn't take into account any type of loan or debt you have. It only takes into account specifically what kind of return you're going to get after all of your expenses on the property.
Okay. I know there's a lot of legislation out there kind of pushing some of the old timers out of commercial real estate. What's going on with the legislation and stuff that's out there in commercial real estate?
Yeah, that's probably the biggest issue we have right now in the apartment building space specifically. I mean, you have a lot of apartment building owners that are self-made. I mean, these are people that, and it's a lot of minorities as well. I mean, people that work their butts off every single day, and they put their money into buying apartment buildings, and people bought them. Back then prices were cheaper, but still people saved every paycheck, bought an apartment building, got good debt from a seller that was willing to carry the mortgage themselves for them. And they bought all these properties over time. And then what's happening now is they can't afford to keep them. Right now in the city of LA, if you want to raise your rate of rent, you can't do it. You haven't been able to do it for 2 years, and they just put the moratorium in place for another 2 years. So you have 4 years without a single rent increase in the city of LA. And on top of that, you had your water bill go up. They've been telling you they're going to increase it. LADWP is increasing your water bill. Your trash bill goes up. And now you have your taxes. Your property taxes go up every single year. And you have all these things happening at the same time of not being able to increase your rents. Plus, there's already rent control in the city of LA. So before, you could only increase your rents 3% anyways.
Wow.
4% on your best year. And so you have a lot of these units that are really old, dilapidated. People don't have the money to fix them up. They don't have the money to pay their mortgages, the money to pay their taxes, the property tax bill, and you can't raise the rents on the tenants, even though rents in the area are rising drastically. And the big reason rents are raising drastically is because of rent control. These policies We have so many case studies throughout history of rent control not working, and yet we still put it in place. We have a statewide rent control that was just passed a few years ago, and all these little policies are pushing more and more owners out. You have this moratorium on evictions. You can't evict tenants, even though tenants aren't paying you rent. You still got to pay your bills. And so all these mom and pops are getting frustrated, and they're like, look, we can't afford to be a property owner any longer. And what this is doing, it's pushing these demagogue principles, right? Like, let's get the masses, because the masses are renters, to pass these policies. And what it does is it tells your children and your children's children that you're never going to generate wealth. Because you and I both know, number one way to generate wealth is by owning assets. And we're making it harder and harder for the common man to own assets because of these policies.
On the rent moratorium, do you have to show any documentation to not pay your rent, or how did that work? I don't understand how that worked.
It kind of started out that way.
Okay.
They first stated, okay, you have to show that you've had hardship. You have to show
Right.
that you've been laid off. You have to show that you're at an income level that can't afford it, and you had to apply for all these things. That kind of went away, and we really haven't seen much enforcement of it either. And even if you were able to evict the tenants for not payment, or for not being able to get even a portion of their rent in, the courts put a moratorium on evictions. So you couldn't even evict people anyways. So really, people are just not able to pay their rent. And these owners are kind of getting to a point where they're like, hey, what do I do? Maybe I'll just maybe I'll just not pay my mortgage. Well, then you go in arrears on your mortgage, and those ding on your credit, and then now you can't do anything else with your life. So it's become a big problem. And the same time, with this rent moratorium happening, or not being able to raise rates, not being able to evict tenants, these landlords are stuck. They don't know what to do.
That's what I'm hearing from some of the clients you brought my way. It's like you said, it's not big corporations that own these properties, it's individuals, and they're trying to figure out how that income coming from those properties was used to go ahead and sustain their lifestyle, but also to pay their mortgages. So it's kind of a bad situation to be in.
Oh, it's terrible.
Yeah,
And, a lot of these people, it's their retirement.
Oh,
and
yeah.
You've stolen people's retirement from them. And, they're making property owners out to be bad guys, which is, it's wild to think about, because like I said, it is a lot of just common man that owns these properties. It's like your everyday neighbor. It's people that worked hard, to saved money and bought a property, and now the tenants own their building, not them.
Mhm.
And they're not able to live on their retirement money because the government's basically telling people they don't have to pay their rent, and you don't get to get your rent money to pay for your own bills and your own expenses.
I remember a couple of clients that you introduced me to, they had properties in opportunity zones, and they got them premium dollars on there for their properties.
Yeah, opportunity zones are interesting. They didn't turn out to be everything that they were supposed to be.
Mhm.
It is a great opportunity for people to get away from, like, if you wanted to buy an opportunity zone into an opportunity zone fund that's going to develop an asset in an opportunity zone, it does create an allure, because you're able to not pay your capital gains on the back end when the property sells, if you've held it for 10 years, and if you've put as much into the property as you bought it for. So if you buy it for $1 million, put $1 million into it and hold it for 10 years, you have no capital gains on the back end, even if you sold it for an exponentially higher number. Also, it gives you a bit of a tax break on the front end, right? If I'm going to go into buying into an opportunity zone fund and I do a 1031 exchange into it, you can exchange into it, not even using a 1031 policy, and you can defer your capital gains for about 10 years. You still have to pay your capital gains, but you get a deferment for 10 years, which is helpful in some respect.
So 1031 exchange, kind of explain that, how that works, or what that's about.
That's not an acronym, is it?
No. We're gonna let that one slide.
1031 exchange is basically an IRS platform that allows you to defer your capital gains when you exchange into another like-kind asset. So if I sell an income-producing asset, like an apartment building or a retail strip center, and I exchange into another income-producing piece of land or building, I can defer whatever I profited. So I bought it for $1 million and sold it for $2 million. I've got a spread of $1 million I made on that property, and typically I have to pay, my federal, which would be anywhere from 20 to 35%, and then my state, which is 11% in capital gains. I can defer those by exchanging into another like-kind asset, not having to pay them.
So there's a lot of restrictions, rules, and regulations around a 1031. I know there's a certain time frames you have to meet, all those type of things.
Yeah. So from the time you close escrow on your sale, you have 45 days to identify your up leg, and then 180 days total to close on the purchase. So even if I identify it in the first day, I still have to close on it within 180 days of closing my last sale.
Okay. Back to Back to the opportunity zone, though, the person who owns a property in an opportunity zone. Remember, there was a client that I was talking to, someone to write him a check for 1.5 for that property. And I said, where's it located? Because they want to write a check too quickly. And she told me, I pulled it up. It was an opportunity zone. She ended up getting about $900,000 more when she realized she had that opportunity zone property.
That's a big number. I think there's a lot of people out there that just didn't quite know what opportunity zones were going to be and how they were going to benefit people.
Mm-hmm.
Was it a large piece of land?
Yeah, I think it was a commercial property down there off Crenshaw, where they're doing all the reverberation of that area.
Yeah. So the Crenshaw, so you have the Crenshaw line coming in, which is putting, basically transportation along Crenshaw. The Crenshaw line is a huge addition to that sector. Plus you have all the TOC density bonuses, which is transit oriented communities. Just to get away from that, transit oriented communities, you get higher density buildings. So you can build, let's say you'd normally be able to build 6 units. You can now build upwards of like 36 units, depending on if you're in the transit oriented community 4, 3, 2, 1, even goes up to 5. So based off of your location and proximity to the transit, which Crenshaw line, you're right on it, right? And so you can get rid of your parking, right? So it allows you to build more units because you don't have to have a parking requirement. That's been the biggest thing holding off development in LA, is that there's all these parking requirements to support the number of units you build, and you can get rid of that with the density bonuses allowed along there. So yes, if it is a development lot, you will get a bonus for that, because an opportunity zone fund would love to develop on it to avoid future capital gains. It does give them a bonus.
There's a lot of opportunities out there for first-time home buyers. What if you want to be a first-time commercial real estate buyer? Is there anything out there in terms of loans or lending or?
Yeah, there's a lot. I mean, it's got to be the best lending environment I've ever seen. If you think about where interest rates have been in the past, right now you can buy a property and get 3.5% interest rate on it. You buy your first fourplex. There's a government subsidized program that you can use called it's an acronym. I don't know what it actually stands for now that I think about it, called NACA. At NACA.com, you can get a government subsidized loan on your first fourplex that you buy. If you want to own or occupy, it doesn't matter what race, gender, how much money you make, you can buy one, and they'll give you a loan around 2.5 to 2.6% with zero down, and it's about as good as it gets. I mean, you're basically getting a free fourplex out of it.
Wow. So it has to be a fourplex. What about the dollar amount? Is there a dollar amount tied to that also?
Doesn't have to be a fourplex. It can be a triplex, a duplex. It could even be a single family home, but there is a dollar amount tied to it. It goes up to 1.4 on a fourplex. I believe it's up to 1.1 on a triplex. A duplex, I don't recall the number. But yeah, I mean, it can get you a pretty substantial amount of property. At 1.4, I mean, you can buy a fourplex in almost any fourplex in Long Beach that's not along Belmont Shore for 1.4 and less. You can buy, properties in fourplexes in Torrance, LA for 1.4 and below. I mean, almost all fourplexes around, majority of fourplexes, I would say, in LA County are 1.4 and under. So you qualify, except for in the very elite neighborhoods, you'd qualify to buy a fourplex.
When I drive around, it seems like there's a lot of vacancies in some of these buildings. I mean, there's no lights on. There's not a lot of cars in the parking lot. What's the outlook on the commercial real estate market?
It's both, right? So we had the largest amount of people leaving California during the COVID pandemic, right? We've never had a larger group leave California. We've seen the opposite happen recently, where everybody's coming back. So you did have large vacancies on apartment buildings for a while. If you look at, basically all the college, like near the college universities, I mean, that was a bit like anywhere in Westwood, you couldn't find a full building. I mean, owners have been wanting vacant buildings for years in the multifamily space, and all of a sudden they've got their full building vacant. Now they don't know what to do with it because they couldn't rent it out. So yeah, you had all the graduate students living somewhere else because school was online, all the undergrads doing the same. You had people leaving the state. So that was a big problem for a while. We had huge vacancy rates and rental prices dropping. The exact opposite has happened. We've had the largest increase in rental prices in the last 2 years. And I think the forecast actually through 2024 is we're going to see another large increase in rental prices. On the retail side, I think we did obviously have some backlash, right? A lot of people did get funds, federal funds, but you did see a lot of companies that were already living on the edge just have to close. And so you did see vacancies there on the retail side. The office is probably the one hurting the worst. You know, all the single building offices where people, you know, basically run their own office and it's just them. But the high rises are the ones hurting. The high rises, people don't want to be in a high rise. People don't want to get in elevators and go up. People don't want to be in these massive office buildings with lots of people. And you are seeing a huge amount of vacancy there. A lot of the leases are still in place, just nobody's going to work.
Right.
And
Right.
I think you're going to see that's going to be the area where we see the biggest change. And we'll see probably a lot of those converted, maybe even to residential spaces in some point moving forward.
I noticed they built a couple down the street here, high rise apartment type complex or condos, I guess. And on the bottom, they have like stores and shops, nail shops, a couple, you know, pizza place, sandwich shops like that. That seems like the thing.
Oh, it's the thing. Yeah. You're going to see more and more of that over the next few years. I think we have a housing shortage in California. It's a fact. I mean, if you look at the housing units built throughout history, we had a huge amount of units built, you know, pre-World War II here in California. And then you have, after World War II, you had a big surplus in the 50s and 60s where we built a ton of units. I mean, I want to say it's like 70% of the stock of units in California were built prior to then, from the 60s and before. And then when you get to the 80s, you have another jump of maybe like 10%. And then the 90s and beyond, you've got, you know, like 2-3% here and there. We just haven't been building enough units to support the population in California. There's a huge shortage of housing in California. And the problem isn't rent control. No, that's causing more problems. The problem is we're not building enough housing. So the nice thing about what you talked about is you have these developments now where people are building retail on bottom and units on top. Well, you have the units to support the retail, right, which is a big part of it. But on top of that, you get larger building allowance, right? You don't have those big of setbacks in commercial properties. With residential, you have big setbacks. So if I can build lot line to lot line with commercial, I can build more residential units on top of it. So that's why everyone's doing commercial on the bottom and residential on top.
You know, what would you say is your secret sauce? To me, I've always liked how you can break stuff down in plain layman language so your client who's 70, 60, 80 years old can understand it. But what do you think's your secret sauce? Why have you been so successful?
I'm an owner. I think I'm the same as them, right? I'm a guy that worked his butt off to try to buy apartment buildings, and I'm in the same boat as them. I know the pains that they deal with. I know the pains that everyone is struggling with all these new policies and laws that are going into hurt landlords. So I can relate, for one. Two, I believe in it. Man, I believe in it. I mean, as I was saying when we started this podcast, it's the single greatest way to create wealth is buying and owning assets like apartment buildings or retail strip centers. It is the best thing you can do. And so, you know, it's how I believe in it. I believe that people should be buying more of it. People should be growing with it. And our clients, you know, the clients that I've worked with you in, you know, they're kind of at that other end of the spectrum, right? They created their wealth, and a lot of them don't have kids, and so they're looking to spend it, right? And so we're finding ways other than a 1031 exchange to pull their capital out without having to pay large capital gains, which is what we've been working with you on.
In a tax favored manner.
Tax favored manner. Yep. And then other clients are just looking to find ways of having a sustainable income without dealing with all these crazy policies, right? So they want out of apartment buildings to go into other asset classes, which is what I have them talk with you about. And then I have clients that, you know, maybe are done with apartment buildings and want to go into retail or something else. So it's just understanding people's needs and goals and how to help them best. I mean, it's the same stuff you deal with every day. We have to get to know our client and get to know what's going to help them solve their problem. And at the end of the day, that's what we are. We're problem solvers.
Forging relationships and solving problems.
Yep.
You know, one thing I think you're being pretty modest. Your team, their follow-up is unbelievable. I mean, you know, nothing falls through the cracks with you. And your team is always on top of it. Patrick, I forget the woman's name that I've dealt with also. They're on top of it like you wouldn't believe. It's amazing.
Yeah, we have. I've got the best team in LA County. We sold more apartment buildings and deals that you could have in the county last year, and that's because everyone is on it. Kelly Geary, you know, there's not very many women in our space. Kelly Geary has been with my team now for 2.5 years. Kelly was the top producing female at the company last year. Wow. She might be one of the top producing females in LA County as far as transactions and deals goes, and she's only 24 years old. I mean, Like, where do you find that? I mean, she's been doing wonderful. Olga Wright is been in this space for a long time, and she's just about as much of a pro as you can get. Parker's been on my team now since I started. Parker is also young. He's only 27 years old, but he's gotten a really good grasp of the business, and he's doing deals on his own. And I really don't even have to put any work in with him now. He's gotten really smart. He understands it. He understands a lot of stuff that we're doing together. And then, yeah, Patrick is the best team manager and project manager and transaction coordinator you could ask for. And then we got our new marketing guy, Holden, last year, who helped us probably almost double our revenue last year just because he was so on top of the marketing.
Yeah, I remember when I first came to your office, I had a suit on and I walked in there. I was like, am I at the right place? Everybody had tennis shoes on and hats. It was just very casual, but there was a lot of activities, like a beehive. There was so much stuff going on. It was crazy.
Yeah, it's a fun space. Brett and Woody, we're lucky to work with a good group. Lionstall is a great company. They've grown it from them and 3 other guys in a little office in El Segundo to now they have over 80 agents, and they set up good policies in place. It's a very good culture. Everyone there is there to have a good time. You don't need to wear a suit to work every day to sell apartment buildings or to sell office buildings or any of that stuff.
I'll never wear one again to your place. That's for sure.
It's a lot more fun. It makes everyone more relaxed. And that is it. Everyone is buzzing. I mean, people are on the phone all day trying to help people out.
Yeah. Hey, so if I have a portfolio of real estate, commercial real estate, what suggestions would you give me going forward into 2022, 3, and 24?
That's a good question. It depends on what your goals are, right? If you have a portfolio, are you looking to grow it? If you're looking to grow it, then let's talk about what assets have already fully been depreciated and you can put them into larger units, right? So let's say you have an asset that you bought for $2 million and it's worth, $10 million right now, right? But it's fully been depreciated and you've got all this equity built up in it. Well, that thing's, first of all, not helping on your taxes, right? Because you depreciated the whole last, you're not getting tax benefits. But if you can take that building, sell it for 10 million and go buy a 15, 20 million, even $30 million asset, let's say it's a $30 million asset, well, you're about to get $15 million of depreciation now that you can depreciate that asset over the next 27 years. That's a huge tax benefit for you that you're not capitalizing if you're not taking advantage of that trade, right?
Okay.
So that's a big one, right?
So if you're sitting on a property, highly appreciated, look at stepping up to a bigger property. Possible.
If you think about it, let's just say apples to apples, all properties appreciate 10% a year. It's probably slightly under, it's probably like 7.5 to 8% a year, right? Over the next 10 years, it's going to double in value. Would you rather have a $10 million asset double in value or a $30 million asset double in value? There's a lot of benefits of trading into bigger and better assets, which is why people build portfolios small and grow them, right? But if you're not growing them and you're sitting on it and just holding, it's not really doing much for you other than what it's doing currently, right? So, if you are just looking to, take a step back, no problem. Hold on to your assets. It's a great time to still be an owner, other than the policies in place. So you guys, it's really like we say all the time, it's your goals. What is that goal of that owner?
So, someone older looking to get out, spend time with the grandchildren, travel, those are the ones that are selling, need capital gain mitigation. But the ones who are like in their 40s, 50s, still trying to grow their portfolios, like what you were just talking about, stepping up and moving to bigger properties.
Absolutely. You're crazy not to do it. I mean, Why would you ever sit back on something that has already been appreciated, has tons of equity in it, and that you can utilize to your advantage? Plus, there's going to be 4, interest rate hikes this year, right? We have to do it. Inflation is nuts. It's going to keep going up. Most of the projections say it's already up 7%. It's going to go up another 4% potentially. They have to raise interest rates. It's going to have to happen. But even if they do a quarter point hike, typically throughout history, we haven't raised interest rates more than 1 point a year, right? Like a full point. So we do 4 quarter point hikes. It's still the lowest interest rates have been in history. I mean, they're still incredibly low. Yeah. So it's still a great time to be buying real estate. You're still getting great debt against any asset. So you can, and what's great about that? Okay, you sold that $10 million asset, you go and buy a $15 million or $30 million asset, and you're buying it with, your $10 million cash and you've got $20 million of a loan. But you buy let's say you buy a 5 cap, right? Oh, I got a 5 cap property. So I'm on my $10 million, I'm making a 5% return. But now on the other $20 million, I'm getting a 3.5% loan, or let's say it's 4%. I'm still making 1 point on the bank's money. So I'm still profiting on the bank's money. Why not use the bank's money to make money?
Right. No, I get you. I mean, I never thought about that, moving up to a bigger property. I think a lot of people are sitting on properties waiting. They got that appreciation, scared of capital gains, not thinking of stepping up into a bigger property and making more money.
Yeah. And a lot of people are afraid, we're talking about 15, $30 million properties. Most of my clients are doing, $1 to $2 to $3 to $5 million properties. They're doing much smaller size properties. And that's the most of the mom and pop owners in California. They're just smaller assets. So it works on that same scale on smaller level as well. It's threefold, right? People are afraid of the taxes on the new property. Well, the depreciation you're going to get on the new property is going to far offset that. People are afraid of their capital gains. If you do a 1031, you can avoid the capital gains, right? So that's a positive. You're going to get much more appreciation. So that's another positive. There's a lot of reasons to do it. And I think the, fear and uncertainty and, it drives people to freeze and not make decisions. But really, like, we on average do 15 to 20 1031 exchanges for clients a year. And, this last year was a pretty interesting year. We did less than that. And it's because a lot of our clients were doing alternative tax strategies with you, or doing alternative tax strategies, or cashing out. Some people chose to cash out and pay their taxes, which I think is crazy, but they did it.
Yeah. Like to support our government, I guess.
Yeah.
So point it clear, we're never avoiding taxes. We're deferring taxes.
Deferring taxes.
That's
yeah.
right.
And all of the strategies we're working with you are deferrals.
Yeah. And 1031 is a deferral too. Just kind of kicking the can down the road.
Agreed.
Yeah. So Cameron, before we leave, is there anything that you could tell us that you want to close out with? Anything in particular that's top of mind that would really help some commercial real estate people, or commercial people thinking to buy commercial real estate?
Do it. I mean, I don't wait. I mean, everyone's always waiting on the sideline. If you've been waiting, if you've been thinking about buying it, but you're waiting for that next big crash, or the next time prices go down. If you keep waiting, you're just going to be waiting too long. Here's the thing in Southern California. I touched on it earlier. We have a shortage of housing, right? So it's not like we're going to have this huge, massive influx of housing all of a sudden. We have a housing shortage. So if you can hold on to it, right? If you can get long-term debt or good debt for a cheap rate, and you're not going to be in a place where you are burdened by the property, where the property is making money every month instead of losing money, why wouldn't you buy it now? Because no matter what, throughout time, in a place where you have limited land, an increase in number of people, and less housing available, your prices are going to go up. So if you can hold through those downturns, if there is a downturn, you're going to be fine. And more likely than not, I don't think there's going to be a big enough downturn that's going to justify needing a huge, waiting for the market to crash to go buy. Most people that wait end up waiting forever.
Right. Because they don't have a crystal ball. You can't tell what the future is going to do.
Yeah.
I was going to ask you, so I know you do very well in LA, in Los Angeles, surrounding counties, Riverside, Orange County, going up north to the Santa Barbara area. Do you cover all that down in San Diego, or what's your thought?
I don't know. I have partners that do. San Diego is a great market. I have a lot of clients buying in San Diego. I've moved clients into San Diego as well. I do work them, but it's not my primary markets. I would consider myself an expert of LA County. You want a question about LA County, I know it.
Okay.
But when trying to be an expert in all those areas is tough. But San Diego is a great market. Santa Barbara is a great market. I have lots of clients buying in Santa Barbara as well. I do think that Riverside is blowing up this year. I mean, by far the biggest increase. Riverside County, I got to imagine, if you look at it, it's probably doubled in value in the last 2 years. I mean, which is unbelievable, right?
Mm-hmm.
Like thinking about the property values. So, and a lot of that's, multifaceted. You've got lots of trucking, right? You have lots of pick and pack, where you need to drop shipping.
Right.
All of the online marketplace blew up, especially during COVID, right? Got even bigger. It was already massive and already growing, and it's gotten even bigger. I mean, you can't find industrial warehouses right now. It's the hardest thing to find. If you want an industrial warehouse, you're paying a premium for it. And so they're trying to build more, and all of those jobs are going out to Riverside because you need people to work in those warehouses. So you have a same issue, right? You need more housing. You need rental prices are going up, so property values go up.
Right.
Because your cap rates go up.
So you have the relationships with agents in those particular areas, and you also have the relationships with lenders.
Correct.
People looking for loans. Okay.
Yeah, we have a lot of close relationships with lenders. There's great debt out there. I talked about NACA, but there's tons of great bank debt right now. I mean, banks are being more creative than I've seen them in recent history. I mean, you think about bridge lending. You think about it, everyone thinks, oh, like 9, 10, 12, 15%. Bridge lending isn't that anymore. We're getting bridge lending on properties for 4.5%. Wow. And that bridge lending is interest only, and they're paying for all your renovations or your remodels or your development. I mean, that bridge lending is great. And that's not the kind of lending you saw in the last decade. It's very much a right now thing.
So Cameron can be reached at area code 310-259-7556. And he's with Lionstall. They're in El Segundo. Reach out to him. If you need to sell any commercial properties, he's available. He makes it happen. I can testify to that. And thanks for being here, Cameron.
Hey, thank you, Eric. Good
All right.
day.